Good evening, all the joinees. Hi, this is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. So before we really delve into the webinar topic, let me introduce the topic for today. Meanwhile others join. So today we are going to revolve around screening and selection of mutual fund schemes, wherein we will actually understand how do we actually screen mutual funds from varying categories. So here we will consider typically the fund section of NGEN markets, wherein there are separate buckets for equity, debt, hybrid, and some solution oriented like FOF, domestic, and overseas funds. We will actually see what all are the filter parameters there and actually understand which are very crucial parameters and how do you customize the view when you analyze debt funds or equity funds, right? After that, we will move over and understand how are these funds performing, and how can we check its outperformance or underperformance versus a benchmark using the very crucial compare section on NGEN markets. Herein, we will discuss not just the return parameters, but also the risk parameters. By risk parameters, I mean the risk versus return tab, and also the standard deviation, which is generally a measure of the volatility of each of the funds against the benchmark volatility. After that, we will definitely move ahead and understand how we can do a comparative analysis between, let's say, a SIP type of an investment that you would like to highlight in front of your clients. Alternatively, if the client is more lopsided towards lump sum investment, we can definitely see how we can check lump sum investment in point-to-point analysis. Before that, I will just confirm that my voice is clearly audible. And my screen is clearly visible. I can see some messages in the chat box saying that the voice is very low. Is it audible clearly? Okay, fine, perfect. Okay, so let's move ahead and actually start the presentation. So typically for the first part of the webinar, we would definitely be heading over to the funds section, which is our screener for all the mutual funds in Indian markets. So when you go to the funds section, the first tab, which is the screener tab, will be open by default. Okay, herein you can specify the categories that you would like to choose and analyze mutual funds from. Now, here, before we even proceed further, I would like to highlight that there is no start date that is involved here, meaning whatever performance that you will see here, it could be Sharpe ratio, it could be typically the standard deviation, right? All of those are from the respective fund's inception dates. Okay, because this is a screener, we have not put in a date parameter here. We will definitely see that how we can incorporate a start date parameter in the compare section in the second half of the webinar. Okay, so first of all, I go here, I click on filter categories and I choose a particular category. Let's say at the start, I want to choose all the small cap funds. I want to analyze all the small cap funds. So you will see that there are 4 buckets here. This is the equity bucket, debt, hybrid, and others. Okay, so I will choose small cap from here. Of course, you can choose multiple categories here, but for simplicity's sake, I'm just choosing in one category. I choose one, I click on close. The moment I do that, all the small cap funds will appear here. Okay, after that, what I will do is I'll head over to the filter parameters. Now, what these filter parameters will help me doing is it will short list those particular funds which actually meet my non-negotiable filter parameters. Meaning, I, let's say, do not want those funds who have been around for, let's say, less than 3 years, right? There are very young funds. They typically do not have a reporting history, and I probably would not, backtest, or maybe will not be able to backtest because there's a lack of data, right? So in order to recommend to the clients or even for analysis purpose, that is one particular parameter that is number one non-negotiable parameter for me. Then what I can typically go and do is apply filter parameters, just put minimum age as as 3 years as per my requirement. Once that is typically done, I click on apply. Every single time you put in a parameter, you click on apply, and you will see that the funds will go on reducing. Now, the funds that we have are 3 years or older. Okay, and that can exactly be corroborated by scrolling on this, using the scroller on the right hand side. There is the scroller at the bottom. Just use that to scroll on the right hand side, and the age column typically is on the extreme right hand side, which says that okay, age and years. I can quickly click on that particular column and sort it on the basis of highest to lowest. I can see that the youngest fund is a Bandhan Emerging Business Fund, which is 3.60 years old. And of course, the oldest is Quant Small Cap, which is 26.74 years old. Now, this is the universe that we are dealing with. In addition to that, also we have a minimum AUM as a parameter. If that is something that you would like to specify, you can definitely go ahead and do that. Okay, typically the AUM we have here for minimum AUM, but let's say what happens is at times MFDs or RIAs have this parameter that I do not want those funds which typically have a AUM of more than, let's say, XYZ amount. So in this case, the universe that we have here is typically starting from 36. I mean, the highest is 36,000 crore. The lowest is as low as 161 crore. Right. So typically, if you want to specify or actually, remove those funds which have a very, very huge AUM, you can definitely do that. But for that, you'll have to go to the compare section and delete those funds from your criteria. Here, as a screener, we do not have a maximum AUM as a limit, but here you can definitely specify a minimum AUM parameter. Okay, so using that, let's say I'm considering a minimum AUM of at least 1,000 crore and above. I just put in 1,000. And I click on apply. The moment I put in, all the funds which had a lower AUM than this have actually gotten eliminated from this particular screener. Post that, I will go ahead and put in a minimum returns parameter. Now, minimum returns, what does that say is, in this entire universe that we are trying to screen, I want only those small cap funds who have at least for the last 1 year period. Of course, this is objective. This is typically subjective. In this case, I've considered 1 year period. So from this drop down, you can choose whichever period you want for specifying a minimum return parameter. Okay. For an example's sake, I've considered minimum 1 year return that I really desire from the small cap funds that I will be analyzing is at least a 30%. That's because typically small caps are known to have higher risks. So I would typically go ahead and put in 30% as the minimum 1 year return. The moment I do that, I click on apply. Okay, now I can see that, okay, these are the funds that have actually generated more than 30% or at least a 30% return in the last 1 year period. And of course, all of these are meeting the other parameters also. At least these are 3 years young, 3 years or more older. As you can see, Bandhan Emerging, it definitely meets these parameters, and that's why it is here, right? After that, what you can typically do is you can take them for further analysis in the compare section. But before that, we'll come to that a little later. We'll understand the other parameters that are appearing right here. So firstly, the next most important parameter is the Sharpe ratio. So Sharpe ratio that you can see here tells you what are the risk adjusted returns that are generated by each of these funds from their respective inception dates. Okay, this we have discussed at the start itself, that here we have not considered any start date. So these Sharpe ratio numbers that you will see here are from the respective start dates of these funds. Okay, so for that, I'll just quickly scroll a little bit on my right hand side, and I can see the Sharpe ratio parameter is right here. So it says that, okay, again, top, up and down sorting is definitely available for each of the columns. So you can see that the highest Sharpe ratio from inception of Bandhan Emerging Business Fund is 1.35. Right. On the other hand, the lowest Sharpe ratio I can see is a Quant Small Cap Fund. But of course, this makes sense that because this fund has been around for the last 28 years, right? So everything, each and every movement of that 26, 28 years has been taken into consideration for calculating this Sharpe ratio. So therefore, this does not really become a fair comparison ground if we do not put a common start date. We will subsequently understand how we can actually put in a common start date and do the analysis for a set of funds. Okay. Now, before that, what we really observed here is we had to do a lot of scrolling. Right, we had to find the relevant parameters. Typically for equity, all the net YTM, average duration, maturity, these typically become irrelevant columns, and you have to every time scroll to actually find out the relevant parameter here. That is exactly the reason we have put in preset column views as a parameter or drop down that you can choose from. So for that, just click on this drop down, and because we are analyzing equity funds, you can just from this drop down choose equity columns only. The moment you do that, all the irrelevant or typically junk columns will get eliminated from this view, and you will be left with only relevant columns. So now, in spite of these being small cap funds, we can see that there is fair amount of exposure into large cap for this quant small cap, right? 22% of its portfolio is into large cap stocks, right? And what is the exposure of again accordingly for mid and small. After that, what are the Sharpe ratios, and of course the age as a parameter, how much old is the fund. After that, what we have here is the returns, right? So 2022 calendar year 2022 returns, 2021 as a calendar year returns, those are what are listed here. Okay, next typically is something called as value at risk as a parameter, which you can see here as well as here as a filter parameter. Now, how useful is that is something that we should understand by actually clicking on one particular fund and loading it in a new tab. So for an example, I am loading in Nippon India Small Cap Fund. The moment I click on it, simple left click, mouse click. The moment I click on it, it gets loaded in a new tab and the entire analytics runs for us. Now let us consider, let's just keep the start date as, let's say, 1 year ago. And we can typically see that if we consider 26th of September 2022 as the start date, we can see that what are the value at risk numbers that are really reported by this particular fund against the benchmark. Now, what this signifies is what is the 5% chance. Why do I say 5%? That's because 95% is the confidence interval. So 100 minus 95 becomes a 5% chance. So if history were to repeat, what is the 5% chance that my fund would lose 15%? And at the same time, my benchmark would lose 18%. So that means my fund actually goes down, but goes down to a lesser extent as compared to the benchmark. It will have lesser losses as compared to the benchmark losses during the same time period. So this is nothing but a measure of downside risk that the fund has versus the benchmark. In simpler terms, if we were to understand this in a little bit of layman terms, what this means is if 100 rupees is invested simultaneously in the fund as well as the benchmark, right? Of course, benchmark here is Nifty Small Cap 250, which is the index, right? If 100 rupees is simultaneously invested in both of these particular securities, one index and one fund, we can see that our capital erosion, that means 100 rupees, out of those 100 rupees, 15.98, meaning close to 16 rupees would have been capital eroded if in case of this fund, right? That would be my losses, and ultimately 85 rupees would be my capital protection. Okay, that would be intact with me, 85 rupees in case of this fund. On the other hand, in case of benchmark, it would have been 18 rupees would have been my capital erosion, meaning out of 100, 18 gone. What we are left with is around 82, 83, right? That is what this particular value at risk model means. Now, the interpretation of this is what is the value that is at risk? At risk of what? At risk of losing, right? That is how you read this VAR, or value at risk model. Now, you can typically see here there are two value at risk models here. One is historical and one is implied. But you can typically see in the fund section, we have considered only one model, which is historical value at risk model. That is because industry standard only historical is considered. We have just given value at risk implied for an information sake, or that was the requirement for the other institutional users, and that's the reason we have provided it. But what you can typically use is the historical model only. I will, before going ahead, explain what implied means as well. So just because the name is implied, it does not mean that it talks about future, or it is implying something about the future. It's just that both of it considers the past only. So historical value at risk is also depending upon the past happenings of a particular mutual fund or a benchmark. Implied also takes into consideration the historical data itself. What is different is the calculation methodology. right? Historical value at risk, if you just hover on this question mark, you will know that historical, okay, value at risk shows the amount of annual returns that has 1 minus x, which is 100 minus 95, which is 5% chance of occurring based on historical returns. The only thing that you should be focusing on right now is the historical returns, which is the last line here. Okay, so to calculate historical value at risk, what the model considers is the historical returns of a particular security. On the other hand, the only difference between historical and implied is, if you hover on this question mark, it says it takes into consideration the historical volatility to come up with these numbers. Okay, so implied value at risk depends upon the volatility or the risk or the standard deviation numbers of a fund as well as the benchmark to arrive at whatever percentages that you can see alongside that. Okay, that is the only difference. That is the only calculation methodology difference. The interpretation remains the exact same. Okay, so implied value at risk, again, this also means that there's a 5% chance if we consider if we base the analysis on volatility numbers of the fund as well as the benchmark, that your fund will have a loss of 18.22. This is again returns, loss in returns, right? Negative 18.22 versus the benchmark's loss of negative 20.73. That is exactly the difference between historical and implied. Let's go back to the fund section. Now, when we come to this interpretation, we can see that if we consider all the numbers, value at risk, historical numbers here, we can see that quant small cap has had a downside risk, which is the lowest in the entire category, right? It has a downside risk of negative 11.95. On the other hand, Sundaram small cap fund as a particular security has a downside risk of a negative 33.18. Now, again, to highlight here again, all of this data is since the respective fund's inception date. Okay, and that's the reason you can see such a variation, because this is not typically starting from a same start date. Right? So this is how you can interpret this value at risk as a parameter. And typically, if it's a conservative client or an aggressive client, depending upon the client's risk appetite or the investment objective, you can specify the downside risk that the client is willing to take, one, and has the ability to take, number two. Right? So typically, in order to build model portfolios, you can definitely use this as a filter parameter and then choose only those funds who actually suit the client's risk appetite. Okay, so typically, if it's a conservative client, you would typically put anything which is about negative 20 or negative 25. Right, that is typically for the conservative clients. For aggressive, you can put anything to a tune of negative 35 or so. Right, that is something as a parallels. You can do that as a parallels, but of course this is again subjective depending upon your clients or the clients that you are trying to cater to. Okay, but this is what it means. Now, once this is through, what we will now do is we will take all of these funds to the compare section and understand what are the performances of these funds. Because what we've done honestly here is, in the screener, we've chosen funds depending upon this one particular criteria, which says for returns typically, which says last 1 year returns has to be at least 30. Right? But here we've not considered, okay, what were the index returns? Because if, in spite of these being actively managed funds, if these are not able to beat the benchmark returns, then what is typically the use of actually going ahead and recommending these funds to the clients, right? So it is very, very crucial to actually check if these funds have actually outperformed the benchmark or not. So where will you check that? For that, we will have to go to the compare section, and that is the next part what we are going to discuss in the webinar. So once this is done, you will click on add top 50 to compare. What that will do is, in one single shot, up to top 50 funds in the compare in the fund section, they will be added automatically in the compare section. Okay, here in this case, I can see close to 8 funds. And if I just click on this one single button, they will automatically get added in the compare section like this. Right? Alternatively, you can you also have the flexibility of actually choosing in the funds that you would like to take in the compare section. For that, you will have to individually click on this and they will get added in the compare section. Okay, but this is a quicker or a effective way of doing that. Now, once they are added in the compare section, the entire universe of analysis opens up. Okay, now the first thing that we are going to do here is we are going to put in a start date, because as you see the variability here, right? So one is very, very young, typically just 3 years old, one is a 26-year-old, right? In order to do a comparative analysis, we'll have to put in a common start date. Let's say you want to base this analysis on the basis of, let's say, last 5 years. Then what will you do is you'll go to this returns column, and there's a settings wheel just beside it. You will click on that, and you just need to put in the start date for analysis. Here, let's consider this again as we discussed 5 years ago. So let's say 27th of September 2018. The moment you put in the date, you click on go. The moment you do that, you will see an exclamation mark here, which says, okay, you've chosen a custom start date. This is just trying to, bring it to your notice that now these data that you're seeing, the Sharpe ratio data, the CAGR, the standard deviation, is not from inception. It is from the custom date that you have put. Okay, that is exactly what this exclamation marks means. Now, if we just sort this on the basis of Sharpe ratio, we can see that, okay, Bandhan Emerging Business Fund still is the outperforming fund as compared to the others. But if we were to do the inception analysis, quant was very, very low Sharpe ratio, and that picture has completely changed. The Sharpe ratio of quant small cap is actually the second best, which is a Sharpe ratio of 1. Okay, that is what this comparative analysis helps you in doing, because we've taken a common start date of 5 years period. Now, how will we make this analysis more useful or more insightful is when we add a benchmark here. The moment we add in a benchmark, we will be actually able to see that which among these funds are actually managing to outperform the benchmark and which of these are not, right? So for that, what I will do is I'll go at the top in the compare section itself. I am going at add other items. I will choose in a benchmark because these are small caps. I am going to choose in relevant benchmark, let's say Nifty small cap 250. The moment I do that, it will get added as a row item. If you would have noticed, Nifty small cap 250 has been added as a row item now. Now, let me sort this again on the basis of Sharpe ratio only, right? The moment I do that, I can see that, okay, all these particular funds, if we consider last 5 years, have actually managed to outperform the benchmark's Sharpe ratio, right? The benchmark's Sharpe ratio is a 0.57. All of the funds that we are currently analyzing are actually generating a Sharpe ratio which is more than the benchmark. Let's come to the second important parameter, which is the standard deviation or the volatility numbers, which is an indicator of risk that a fund takes to achieve the returns. That is typically highlighted using the standard deviation, or the measure of that is the standard deviation measure. The moment you click on that, it will again get sorted on the basis of ascending to descending order. So in this case, we can see that Bandhan Emerging Business Fund has a standard deviation or a risk of a 16.74, which is the lowest in the entire category. On the other hand, the benchmark standard deviation, meaning the risk or the volatility, is around 20%. So all the funds that you can typically see above this particular benchmark row have actually managed to generate returns, whatever returns that they have generated, by taking in a lesser risk. And that is exactly what is being highlighted here, because they have lower standard deviation as compared to the benchmark. On the other hand, ITI small cap and quant small cap have actually generated returns by taking in some amount of excess risk as compared to the benchmark. And that is one analysis that you can typically do from here. Right. Of course, understanding returns of these particular funds against the benchmark across time periods is equally easy. What we were discussing right now is, of course, standard deviation, Sharpe ratio, which are measures of risk-adjusted returns, or typically only volatility. But let's say you want to analyze only last 6 months or 7 months return, right? Typically, let's say you want to do a year-to-date analysis, right? So meaning January to September. If you want to do that analysis, returns only, right? Just click on year to date as a column heading, and you will see that, okay, the best performing fund in this particular year of 2023 has been, only considering the returns, by the way, is Nippon India small cap with a YTD return of a 31.80% in the last 9 months. Right. On the other hand, we can see quant, in fact, generating the lowest return in the entire list, which is in fact even lesser than the benchmark return, right? So benchmark return, if we consider year-to-date scenario, is a 28%. Quant's return is a 26%. Right. Now, if you want to do this analysis for a custom start date or maybe custom period of, let's say, last 1 week only, because last 1 week typically has been very, very volatile, for typically Indian markets. So what you can do is, let's say you want to do only last 1 week analysis, the only place that you can go to is go to return column. This is your go-to place. You want to do last 1 week analysis, go to, start date here and 2023. September, and let's say 22nd or maybe 20th of September. The moment I do that, I click on go. You will see that all of these columns, of course, do not have data because there is no data for this particular analysis. But in this case, the cumulative return is where you should be focusing on. You can see that this column will come in only when you put in a start date here. Okay, for an example, I'll quickly show, I'll not put in anything here. I can see that there are dashes in this column. This cumulative column will only pop up or will have data only when you put in a start date here. So now what we have done is we've quickly taken in 20th September as the start date, and I click on go. Only then this cumulative column got data. So we can see that the Nifty small cap 250 as a benchmark fell by a negative 0.18% in the last 1 week or period. On the other hand, all the other funds that we have in this particular selection in the last 1 odd week period have actually generated positive returns. Right. So if you sort this on the basis of highest to lowest, we can see Bandhan outperforming the entire lot. So this is one analysis. Of course, we did this for a week period. You can definitely do this for any period that you can see not listed here. So let's say you want to do a 4-month analysis, right? What you can do is just put in the start date of, last 4 months, and you will have this cumulative numbers here. So that's something that is possible. That is something that is really capability of this platform. Okay. Typically, once this is done, we will then move ahead and understand how a quick heat map can be created to actually understand year-wise return performances of each of these funds, again, comparing that with the benchmark. So for that, the go-to tab, of course, is the years tab. The moment we go here, there's a heat map kind of thing that is done, which says that if it's very, very dark green, that means it's positive return, the best positive return. On the other hand, if it's a very, very dark red color, that typically means it's the worst return, right? So for an example, in 2019, if that is 1 year that we were to consider, we can see that okay, Nippon India actually gave in the best returns. By best, I mean the lowest negative return, right? So negative 2.52% only was the loss that was reported or recorded by Nippon India small cap. On the other hand, Quant, in fact, recorded the highest loss. That's negative 23.51. Now, this picture exactly reversed when we come to 2020, and that is something that can be highlighted here, right? So Quant small cap fund actually was the best performer in the entire lot. The index return is somewhere here. Nifty small cap 250 in 2020 as a calendar year gave in 25%. On the other hand, Quant was what? Excess 50% return if we consider only 2020, right? So this is one quick analysis that you can do in one single go using this years tab. Now, if you want to customize these periods, okay, let's say you do not want to check it for a calendar year, you want to check it for a financial year, or maybe a scenario that you would like to build, then what you will do is you will quickly go on point-to-point analysis, which is the third last tab in the compare section. The moment you go there are 5 buckets that are given for your customization. Okay, you can put in dates of your choice here and actually check the performance of these funds in that particular time period. This is a point-to-point performance, okay, from a start date to an end date. Okay, so let's say we are considering a financial year scenario. So what I will typically do is in one of the buckets, so let's say I'll start with this first bucket, I put in the start dates of a typical financial year, right? So 2021 as a financial year, let's say 1st of April, and let's say end, of course, will be 2022 March. The moment I do that, okay, I can see that, of course, this is in amount, but let me first show it in percentage. So this tells you what have been the returns of each of these funds if we consider one financial year as a scenario. Now, the second, third, fourth, fifth bucket can be used for actually building scenarios of your choice, meaning one could be a 5-year scenario, 5-year lump sum analysis scenario, 10-year lump sum analysis scenario. Something else could be like a post-COVID scenario. Typically, if we were to check what, really happened to these funds' performances post-COVID, right? So you can typically build that scenario in any of these buckets. So quickly, I'll just quickly show it to you. So it's pretty straightforward. That way you just have to put in the start date and put in an end date. Of course, it has to be a date which has available prices. So we are on 29th of September. We'll have to choose a 28th of September because those are the closing prices that are typically available. So yeah, so when we do that, you will typically see that these are the percentages. As you see that this period under consideration is more than a year, and that's the reason the returns that you can see here are absolute returns. That's because we have chosen absolute, which is cumulative return for the entire time period under consideration. If you want to check this on an annualized level or annualized basis, just there's a toggle button that you can use and quickly navigate or switch it to annualized level. Okay. That is how you can actually build scenarios of your choice in any of these 5 buckets. Now, there's one more analysis that you can do here using this point to point is the lump sum investment value analysis. Let's say the client that you're catering to is inclined towards a lump sum investment only, right? So, and typically, presenting data in percentages might be a little, difficult for the client to relate to, right? And that is exactly the reason we've given this lump sum investment value in rupees tab. Here you can put in an amount of your choice. Let's consider 10 lakh rupees for an example. And if we were to see that how much an investment of 10 lakh would have become, if it would have been, if 10 lakh would have been invested on 1st of May 2020, what would have been its value on 27th of September 2023? You can just put in that amount and you can see that, okay, in quant small cap, if 10 lakh would have been put in, it would have become 52 lakh 907 rupees, right? On the other hand, in ITI small cap fund, it would have become 24.86 lakh. That typically becomes very, very relevant or relatable for the client to understand if it is in amount terms. And that is exactly the problem that we are trying to address here, right? In addition to that, let's say now the client is typically, or you want to typically highlight how a SIP investment would be a better investment for the client. And that is exactly the reason we have this monthly SIP tab, which is right here beside the years tab. So firstly, we understood years tab, which is, calendar year analysis. Next, we understood point to point tab, which is a lump sum investment analysis, as well as customized scenario basis analysis. Okay. Lastly, we are understanding monthly SIP analysis. In monthly SIP, the moment you click on this particular tab, you will be prompted to put in an installment amount. Of course, this is a notional installment amount. So let's consider, for an example, 7,500 every single month invested in each of these funds. Again, from a start date to an end date. Okay, so currently we are doing this analysis, or rather we are being stopped at, we are actually, we are really hard stopping the analysis from 25th of February 2020, and the platform will not let you go beyond that. And that the reason for that is the fund that we have here. The Bandhan Emerging Businesses Fund is actually, only 3.60 years old. Even before actually seeing the launch date of this particular fund, I can say that it launched or started trading on 25th of February 2020. And that's because this platform is actually stopping me in going beyond this particular date for analysis. Okay. The moment I remove that particular fund from the list that I have here, how do I remove that? The methodology is simple. Go to main list and click on delete. The moment I delete that, I go to monthly SIP analysis, and now I will let, the platform will let me go beyond that, beyond 25th of February, which is again stopping me at 17th of February. Why is that so? Simple reason. ITI small cap, which I have a fund in the list, is a 3.63-year-old, which launched on 17th of February 2020. So that is how the platform will ensure that the comparative analysis that you're doing, that there is no typical fund which is not there in existence. There is no bias that is attached to that particular fund, right? That is the reason to choose only minimum common period that is available for all the funds in this list. Now, the moment we do that, we can actually sort it on the basis of CAGR, and we can see that if we consider this particular time period, we can see that quant small cap has actually generated the best XIRR in the last three and a half year period. On the other hand, the benchmark return, which is Nifty Small Cap 250, is only at a 31.32%. Right. And in fact, there's one fund that has actually generated a lesser XIRR, which is, of course, as you can see, is ITI Small Cap Fund. Now, if you want to do this analysis on a one particular fund in a detailed manner and actually generate a report for your client, that is also possible. For that, just click on this small icon that you can see alongside a fund. Okay, so for an example, HDFC Small Cap Fund, I want to run a detailed SIP analysis. The moment I click on this, it will get open in a new tab. And I can, of course, specify the parameters. Alternatively, I can see the statistics in detail. So for an example, 7,500 invested every single month between 17th of February 2020 to 29th of September 2023. That amounts to 44 installments. Therefore, amount invested becomes 3,30,000, and that 3,30,000 with a XIRR of 36% gives in a final value of 6,11,000. And that's the month-on-month split of the NAVs, the units acquired, and of course the portfolio value. Now, what you can see here alongside that is a graphical manner representation of this exact same thing. What you can see here is the blue line indicates the gradual increase in the invested value of your portfolio. So for an example, if your portfolio consists of only one SIP, which is into HDFC small cap, your portfolio value is gradually increasing. If you see, there's a step up linear increase, right? 7,500, 7,500 every single month. And that is this gradual increase, which is being depicted by this green line. Okay. On the other hand, the orange color indication that you can see here is the NAV movement of this particular fund, which is coming in from this particular parameter. This NAV movement that you can see, it starts from 39.29, which was the NAV when the SIP was started. And the current NAV, if you see, is 104.77. Okay, that's the orange line. That is what the orange line is depicting. Now, your portfolio value will definitely depend on what? On the NAV's value itself, right? And on the investment value. And that is typically indicated by this blue line over here, right? You can see that this particular line will, it will have a dip when the NAV is having a dip. That's because your portfolio is typically dependent upon the NAV movement of the fund, right? And this exactly is the surplus or the profit or the excess that you can see, right? The 3 lakh has made a 6 lakh, right? This is exactly where is it coming from. This difference between this green line and this blue line here. This is the surplus of your portfolio. Okay, so typically this is how you read this graph. And of course, you can take a dump of all of this analysis into a PDF and actually share this across with your client. I'll quickly show how a detailed 2-pager PDF will look like. You can just click on this. You can click on Create PDF. And a 2-pager, or rather a multiple-pager detailed PDF will get open. Of course, I would just like to highlight that all our exports, PDF exports, are going to be co-branded. You will have your own company name and logo on the left-hand side. And this is how the detailed analysis will look like. Now, before typically closing in on the webinar, I would just like to highlight just one thing that we currently analyzed for small cap funds. Following the same process, you can analyze any of the equity category, right? Typically, the parameters will be the same. But what I would like to specifically highlight differently is how do you analyze debt funds. So for debt, there are a couple of parameters that get added. Let's say, for an example, you would like to analyze bank and PSU funds, right? Or maybe, for example, credit risk funds. You choose whatever funds you want. You click on close. The moment you do that, you will see this error. And that's because the parameters that we have put in here actually, it's impossible to expect a 1-year return of a 30% from any of the debt funds. And that's the reason you get this error here. How you can troubleshoot this is just click on clear. All these filter parameters will go away and all the data will come up. Okay, now typically equity columns are of no use or not of very much use for debt analysis. What is really relevant here is the debt columns, and that's the reason we have given this drop down. Quickly switch to debt columns, and you will see typically important parameters like their exposures, or maybe their holdings into credit ratings into sovereign rated, AAA rated securities. What is the percentage of its holding that is coming from sovereign rated, AAA rated, AA rated, right? What is the average maturity of the portfolio of a particular fund? Of course, that comes in from the underlying maturities of the components of the fund. And that is how you can definitely have a look at that. And of course, the YTM and the net YTM, because this ultimately becomes a decision-making parameter or a return measure for debt funds, right? You can quickly sort them on the basis of any of these parameters, and you can have a look at this, right? That is typically it from my side for webinar related discussion. We can now throw the forum open for a Q&A session wherein you can ask your questions by either typing it in the chat box or unmuting yourself to speak. Thank you.
Hi, while I'm Dibinu Mujumdar from Kolkata, okay. While you're showing the date fund, your screen was, surprised by the last equity screen. So if you can start the date fund presentation once more from the beginning, it will help me.
Sure, sure. I'm so sorry if my screen got stuck. Is it visible now?
Yes.
Okay. So what I was saying is, if you go to the fund section, there's this filter categories option wherein now you will choose debt category funds. So let's not just add a lot of categories here. Let's analyze only credit risk funds for an example. The moment I do that, I click on close, and I will see all the credit risk funds appearing here on my screener. Okay. After that, typically for debt columns, the relevant columns would be, AAA rated securities, sovereign rated securities, YTM, average maturity of a particular fund, right? All of those columns become relevant and not the Sharpe ratio, because Sharpe ratio is ultimately risk adjusted return. And using that as a parameter for debt is just not, possible, right? So for that, we have given in a drop down wherein you can, so first default, it is on all columns, right? So you will see all the columns here. It's a long list, right? If you want to actually restrict your view, you can just from this drop down choose debt columns only, and then all the relevant columns show up here. Okay, the net YTM, the TER, meaning the total expense ratio of the fund, right? What is really there for the fund, and of course the ratings, the AAA rated securities that the fund has, the AA rated, sovereign rated. Higher the sovereign rated or the AAA rated, the better the fund is with respect to its credit ratings. Typically, it's the quality of debt, right, that it has. Right. So in this case, we can see that IDBI Credit Risk Fund has the highest sovereign rated securities, which is a 52.28%, the highest among the entire lot, right? So this is how you can actually analyze debt funds in the screener.
Thank you. Understood.
Yeah.
Yeah, Prajakta, one more question in the compare tab for equity.
Yes.
So, what is the second start date here on the right hand side and holdings column?
This one? Sure. Right. So first of all, okay, fine. So typically to, do this analysis, the fund analytics depends upon the start date that we put here. Okay, this is the start date that you should be putting to. But let's say you want to analyze alpha or a beta or a tracking error of a particular fund against the benchmark. So now these are relative, ratios, right? You cannot calculate an excess return over benchmark if you do not have a benchmark. And that's the reason currently you can see all the dashes here. The beta cannot be calculated if a relative measure or what beta against what is not put in. Okay, and that's the reason we have given in a separate section here to add in a benchmark. The benchmark that we added got added here as a row heading, right? This got added as a row column. Row only got added. But here, when we go a little bit on the right hand side, we can actually add in a benchmark here as well and actually check the excess or the alpha that a fund generates over the benchmark.
Basically, that is a okay. So okay.
right?
Because
The moment I add in the benchmark here, now this start date is for this benchmark analysis and not for this analysis. If you change the start date, nothing will happen here, because this, as you can see, is relevant to the pink columns, which is right here.
So then why didn't it come earlier? So
That's because we did not put in a benchmark here,
oh,
right?
okay.
Benchmark was not put in here. As you can see, I put in the benchmark right now.
So it will take the start date of the youngest one,
Earlier,
right?
youngest. It will not let you go beyond that date, because ultimately it's a minimum common period analysis that you're doing, right?
Right.
Yeah.
Also, Prajakta,
Yes.
you were showing to generate a report of SIP. Once you
Yes.
select, like I think you chose HDFC small cap.
Yes,
So
yes.
can you generate a PDF of an SIP of, let's say, more than one funds? Let's say there are 4 funds in which SIPs are happening, or we want to suggest. So can you suggest a similar, this graph which is showing on the screen? Can you generate a similar report with more than one fund?
Typically what you'll have to do is, click on, a fund, again. So in a new tab, this will load. And again, you can generate a PDF, and then you can manually collate all of these PDFs and take it. So in one single page, a comparative analysis will run like this. The graph will come only when you run an individual fund SIP analysis like this.
Okay,
So,
but not like a portfolio. If you constructed an SIP portfolio of 4 or 5 funds,
Right.
graph you want
No.
Oh.
Yeah,
Raj,
just to I don't know, just to add here. If you have a portfolio and you want to run an SIP, there are a few other things that you have to consider. I mean, for example, if you have 2-3 funds in that portfolio with certain weightages, as time goes by, the return and as a result of those NAVs moving, those portfolios will have to be rebalanced or rescaled over time, right? So if you run an SIP analysis, then you will have to consider that as well. So generally speaking, we don't provide an SIP analysis for a portfolio. We always give it for single returns. So if you look at, you can do an SIP on a fund, you can do an SIP on an index if you want, you can do it on a stock as well if you want to see it. But we don't do it for weighted portfolios, because obviously the individual weights as time goes by will continue to change, and then that affects the results. So what you get is not what will actually happen in reality. Hopefully that makes sense.
Yeah.
সপ্তিক অরূপ এসেছিলেন?
So there's a question in the chat box which says, I joined a little late. Will you be conducting the same session again? Ma'am, please note that the recordings of these sessions would be available and uploaded on YouTube channel by the next week. So you can definitely check the recordings there. In addition to that, if you would like to have a one-to-one session scheduled, you can definitely reach out to us and we will get it scheduled for you. So there's a question in the chat box which says you must provide one default setting. By default setting, do you mean the column look, or can you please explain?
Here, see, everything we have to select. AUM, age,
Yes.
then SAP ratio.
Oh, okay. Yeah.
If you put one default setting, which is the standard one, will help to get the basic detail, and other we can do customize and we can compare this.
Yeah, hi, this is Aruna here. The issue is that these filters will obviously change depending on what you're looking at. So if you're looking at equity funds like large cap, small cap funds, the expectation of what your SHARP or your VAR or even your returns will be very different from when you're searching for debt funds or even liquid funds, etc. So we have kept it open. Because they obviously changed based on what kind of filters you have on in terms of the type of funds you're looking at. So, it's very hard to basically provide you a default setting here because, if you're looking at, if we give you something here, you'll only get equity funds, you won't get any liquid funds or debt funds or anything of that sort. So that's the reason we've kept it open.
But we can customize setting for the debt for equity like that, no?
Yes. So as you change the category,
So whenever I'm going for the debt, in debt I get the
Yes.
default setting. When I go to equity, I can get the
I see.
default setting for the equity. That we can do, no?
Okay, so we can probably give you a set of default settings which can be applied to maybe certain types of overall funds. Okay, that's not a bad idea. Projekta, let's write this down. Maybe we can provide a few buttons on the right which input
Yes,
set
sir,
of
sure.
default setting based on what kind of funds are looking at.
So it will have the standard evaluation as well as the customized evaluation.
Fair enough.
One thing in this, like in the equity setting, there are multiple parameters you have put, be it risk or returns. Is there any category which gives an indication of the style of the fund?
Here we don't. By style, you mean is this a declared
Yeah,
style by
does the fund follow a growth style or a blended style or a value style?
I see.
Something like that?
We don't currently have any kind of metadata um, for that. We only have SEBI categories. I mean, is this information declared by the AMC or is this something that you would expect us to calculate and provide?
AMC wouldn't be declaring that. Most of the time, this is an information you get basis your interaction with the MC. But I'm
I
saying
see.
if there are underlying stocks which are there in the portfolio, is there a way to categorize those stocks and accordingly, put them in a matrix saying growth, value, blended? Morningstar does
Understand.
something like that. I don't know how much relevant it is, but it give some sense, of what.
Understand. Understand. So we currently don't have something like that, but we can check. I mean, the only way this will be calculated, this can be calculated, is if we have some information, extra information about the stocks that they're holding, and if those stocks can then be further classified into growth, value, DMA, etc. And then we use that, to then categorize the fund as we come up to the fund level and say that this is a growth fund because most of their funds are most of the stocks.
Like you have like you have a quant which kind of at a blended basis tells you, large cap, mid cap, small cap, beyond the category of the underlying fund itself, and that is done basis the underlying holdings. So the same thing.
So one thing you can use is even on the screen of the let's go to the screen for a second. If you launch equity funds, you can actually see a large cap, mid cap, and small cap percentage holding of any of those funds as a column. So you can actually use that to sort. Let's say you were interested in something that has a specific kind of allocation to the small cap category. You can do that. These columns actually exist in the screener as well, not just the composite.
Yeah, I mean something similar. If this can be replicated on a style basis, then maybe that could be an help. That's a feedback. So
even value research gives it. Hello.
Right. Yeah.
Yeah, even value research gives this.
Okay, understand. We'll have a look.
It basically comes in 9 squares.
Yes. I've seen that. I have seen that picture. It's not entirely clear how it's calculated, so we just need to be sure because, as with everything, we want to make sure whatever we show on our platform is clear users, so nothing should be a mystery. So we want to make sure we understand exactly what's going on, before we include it.
Yeah.
Is it possible to generate a one pager for the scheme fund manager and how much fund, which scheme they are managing, how much AUM they are managing, like summary of the.
Yes.
Sure. So you can see it. But I don't think that entire information comes in a PDF. But you can actually see it in one of the tabs about fund managers. So let's go with the fund manager tab. Yeah. So here you can see what other funds they're managing. All the information is here. And a one-pager PDF is anyway available, but it will just show you who the fund manager of that particular fund is.
Yes. Okay, thank you.
No problem. Any other questions, please let us know.
Thank you.
Thank you very much. If there are no other questions, I think we can close for today. Thank you.
Yes, sir. So thank you everyone for joining in. You can definitely have a look at our recorded webinar sessions on our YouTube channel. They are updated pretty frequently there. You will see even this week's webinar, I mean the one that we are conducting, will get recorded and uploaded on the YouTube channel in the next week by Wednesday or Thursday. There's a dedicated playlist for webinars. Already 82 videos have been uploaded. You can definitely have a look at those. So thank you again for joining in. Have a great weekend ahead, and thank you. Bye.